Hi, welcome back to Bazaar Morning Call. We wake up to negative cues this morning across the globe. Most of Asia is under pressure. The SGX Nifty has cut its losses a tad bit, but brace yourselves for red on the screen today. Our entire research team is here with us to give us a list of top 10 stocks to watch. By the way, SGX Nifty is now down about 260 points. So let me start with you, Anuj. On your stocks, what are you looking at? And also on the market, given that we could see a lot of red on the screen, do you think the rally that the Nifty has put in so far has come to an end, or is it too soon to call that?
I think I'll first talk about the market, Sonia, because the SGX Nifty low is 94.65. Now on these kind of days, when you have so much global weakness, the SGX Nifty low becomes your sacrosanct number to watch out for. So 94.65 is that number, and from that point we moved on to 96.18. The 20-day moving average comes in at around 95.50, and that's also the 50% retracement area. So all of this is now in that zone of 9500 to 9550. So after a 2-day decline, and if the market starts there, Dow futures in the green, it will be interesting to see if the market picks up or not. But if the global liquidity driven rally has halted, in that case you can't worry much about it. In fact, on that note, first let's invite our guest. We have Arvind Sanga joining us, managing partner of Geosphere Capital. Arvind, good morning. Thanks a lot for joining us. Is this party over now, and is it time to pay bill for those who are still on the dance floor?
Well, it certainly looks like it's taking a pause. And, what's scary about this is clearly, as you've been saying in your discussions, this has been a very liquidity-driven rally. And it has been also partly the incremental data points getting better rally. But the reality is that the incremental data points are not getting better. Now we're seeing a second wave. Obviously the data in places like Latin America and India are quite concerning. But even in places like the US, where things were recovering, and in a few countries in Europe, you're seeing another wave. And we're still in the summer months. We don't know what it'll look like going into winter, later in the year, fall and winter. So I think that the market is realizing that the economic rebound from the absolute depths of the lockdown in April are getting better. But I think this is a long road. So therefore, I think the markets are going to be, there's an old Ajit movie joke about liquid oxygen. Liquid will not let it live, and oxygen will not let it die. And that's the market. The liquidity is the oxygen, and COVID is the liquid. That is the two extreme market is.
Oh yeah, that's a very interesting monologue that you reminded me of. Perhaps it's time to watch that movie again. But Arvind, what about India? We have already underperformed even in this global rally. Yes, we have participated, but a lot of the markets have participated way more than us. Do you reckon the fact that, and now by the way we are fourth largest country in terms of number of cases being reported, do you think this combination of weak fundamentals and this second spread of COVID has the potential to take the Indian market back towards the lows?
Well, India is clearly one of the, one of the most concerning, and we've talked about this before. My concern about India has been that India went into this COVID slowdown with one of the weakest economies amongst the major economies in the world, with a weak financial system, with an extremely poor growth in the previous few quarters, and this is now exacerbated by what's going on here, and a limited balance sheet, right? Unlike let's say US or Europe or Japan, India has very limited bullets to use, and clearly has not been able to use many bullets. And I think the COVID situation, which we didn't know how it would play out, is actually extremely concerning. I know you had Kiran Mazumdar show up a few minutes ago, and I think the amount of testing being done in India is extremely concerning, and the data quality is concerning. Therefore, I think that the COVID situation is bad, and yet India is having to end its lockdown because of the economic costs of the lockdown. So I think India is in a tough spot. I think the best thing that can happen for India, and India needs it more than I guess some of the developed economies, is a quick resolution in terms of both treatment options that are fast and reliable, and a vaccine. Till that happens, I think India is going to remain under pressure and will remain one of the underperformers. But once that comes, I guess things will change. But till that happens, I think India remains one where you have to be prepared to own for the long haul, knowing that there is going to be a lot of roadmap, that there'll be bumps along the way on the road, and there is no magic wand for the economy.
Hey. Good morning, Arvind. Let me get back to Ajit's dialogue. Liquidity se doobne nahi dega ye market. So do you think that you're going to get buying? I mean, you may get these precipitous falls, but you're going to get support also pretty quickly because the Fed is so friendly.
Well, I think that helps. Clearly, the global liquidity is going to spill over into risk assets. I mean, in the U.S., it's been ridiculous, right? You've had companies in bankruptcy, like Hertz going from $1 to $5. Other energy companies and other companies that are, in bankruptcy or in the verge of bankruptcy have tripled and quadrupled. And so, therefore, if you can have companies that are, walking zombies where the stock is going to be worthless in a few days or a few weeks, India certainly has real economy and real companies and real upside when this is behind us. Therefore, I think the liquidity is going to spill over in all directions. And the Fed told us that, they're going to keep liquidity pumping for the next couple of years. So therefore, I think, yes, you're absolutely right. And that is why I use that dialogue. I think the liquidity will provide a floor. And clearly, the giving up on the lockdown, which globally all governments and all politicians have come to realize, fortunately, in the Western economies, it's after the major, slowdown in new cases has happened, even if individual states are seeing more. In India, unfortunately, the lockdown is ending, even though the cases are still on an upward trajectory. But I think no matter what, that liquidity will provide a floor. And for people willing to look through with the bet that at some point there will be a vaccine, there will be opportunity. And we're in that camp. There will be opportunities to buy, but one has to be, patient and not get carried away with liquidity fuel rallies, which seem to go too far too fast.
Okay, no, what I'm asking you pointedly is, are you buying now? For instance, say, let us assume India opens at 9,600 or 9,700. Are you a buyer, and what?
We've had limits on companies that ran away from us in the last 2 weeks.
Okay.
We're hoping that those limits, if they come into play, we will buy. We're not buying because today the market's down and yesterday the market was up.
Okay.
But we've kind of disciplined about that because we've not believed that this rally will run away from us without the fundamentals, quite as good.
Okay. Sonia?
Okay. Arvind, hi, good morning. So, the next question is this, right? I mean, what does one do? What does a retail investor do now? If you're saying that there could be a second wave in the US which could disrupt the rally there could be further risk aversion in India, at least until the vaccine comes or some sort of a treatment comes through. Should one stay away entirely? Should one move to cash, book out of your profits if you have them? Because this market has rallied substantially, especially in spaces like consumption, telecom, technology. What is the strategy now, say for the next couple of months?
I think the strategy, we've been, I'll tell you what our strategy is. We've been sitting on more cash than we've had for the last 3 months than we've ever had in India. And we've been patiently nibbling away whenever the opportunity presents itself. But there's, good companies where the business fundamentals, you mentioned telecom. Telecom is an area that I think is a winner despite, the Supreme Court's somewhat strange actions. But I think a couple of the incumbents are beneficiaries and consumption of data is going up. So there, you have a long-term thesis. And again, pullbacks, I think, present an opportunity. I wouldn't be taking profits unless one is is a completely nimble trader. Obviously, if you're a nimble trader, you can. I think the consumption stocks maybe got a little too far too fast, some of them, because I'm not sure the structural story is quite as, long-term, as differentiated than let's say, the telecom. So I would say that, yes, if you are in stocks that have had a great run based on a hope rally and hoping that everything is going to be back to normal, then I think those stocks are definitely ones you should think about taking profits. But if you're playing for the long term on structural winners post-COVID, then I wouldn't be too quick to get off the party, again, unless one is a nimble trader and take a more long-term view of whether there is still significant upside over the next 2 to 3 years. And again, that depends on individuals' trading preference, but also it depends on the kinds of stocks that one owns.